Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in previous videos, and I will do a quick review on each of them. These are the names that have fulfilled up to or more than 70% of their textbook targets. Also, I will cease coverage on these names because their chart patterns have been invalidated or did not perform up to expectation. I have put in timestamps, so please use them to skip to the names that interest you. In a video on the 2nd of February, I cautioned that Apple could develop into a head and shoulders top. This has happened. Even though Apple tried to rebound over here, it failed to hold above the Ichimoku cloud, which is a sign of lacking in upside bias. This bearish pattern requires a close below the neckline at 244 to complete, and completion has a textbook target at 199.41. Moving on to Hermes, I'm still bearish on this name because it completed a cup and handle top, which I'm not showing on the chart. On 2nd of February, I stayed bearish on Hermes and noted that it may rebound to fill this gap down, the gap down of 19th of January 1st, before resuming the downside. This gap down has been filled on the 12th of February, and Hermes then resumed its downside. I also noted in the video on the 8th of November last year that there are two supports that can bounce Hermes higher, one at 1639, the second one at 1895. Hermes bounced off this support at 1895 4 times without closing below it, suggesting potential for another rebound. Also, there was a gap down on the 2nd of March, which increases the risk of a rebound to fill this gap. Overall, I will stay bearish on Hermes because the cup and handle top is still valid and has a textbook target at 1239.5, but expect a near-term rebound first. I have not updated on Home Depot since the video on the 13th of December last year, in which I said that it has bearish potential because it was forming a head and shoulders top. The recent close above the cloud failed to sustain, and it has since closed back below the cloud and below the 20-week simple moving average, giving Home Depot a downside tilt. Bearish potential is still there, and a weekly close below the neckline around 327.54 will complete this bearish pattern that has a textbook target at 214.23. Moving on to FX, in the last video on the 28th of February, I highlighted the formation of an ascending triangle on the dollar index and said that the outlook will depend on the direction of its break. This ascending triangle was broken to the upside, so the dollar index is now technically bullish. Note that price action has since closed above the Ichimoku cloud as well, giving it an upside tilt. The textbook target of this ascending triangle is 100.38. Just take caution that things could get a bit more interesting going forward. I observed that the dollar index formed 4 upside exhaustion candlesticks, a sign that upside bias is waning. Now, if the dollar index falls from here but does not close below the cloud before rebounding thereafter, this could develop into another bullish pattern called the head and shoulders bottom, and the neckline is at 99.49. Now, if this were to happen and dollar index eventually breaks above 99.49, then this bullish pattern will be complete. Let's see what happens. Dollar Stocky also went the way of dollar index, completing its ascending triangle in a bullish direction. The textbook target is at 9.4366, and dollar Stocky reached a high over here of 9.3511, around 75.4% of its textbook target. Similar to the dollar index, price action forming upside exhaustion candlesticks is a sign of waning upside bias, and dollar Stocky could actually correct lower from here. Declines to 9.0879 will be viewed as the correction phase of this ascending triangle, and downside is expected to rebound to enter the bullish resumption phase. With the dollar index turning bullish, there is no surprise that dollar Swiss also went the same way. It completed a symmetrical triangle in a bullish direction, and the textbook target is at 0.7952. However, I believe dollar Swiss is undergoing the correction phase after upside was rejected 4 times at the Ichimoku cloud. This correction could lead dollar Swiss to the resistance trend line or to the support trend line before rebounding to enter the bullish resumption phase. Closing below the support trend line will invalidate this symmetrical triangle. While the dollar index rallied, dollar CAD went the opposite direction. It completed the ascending triangle in a bearish direction, and as noted in the last video, the textbook target is 243 pips lower from the point of breakdown, which is at 1.3394. Rebounds should be viewed as the correction phase of this ascending triangle, but closing above the resistance at 1.3724 will invalidate this bearish pattern. As a recap, Sing Ringgit remains bearish due to the completion of a head and shoulders top that has a textbook target at 2.8365. But in the last update on the 2nd of February, I noted that Sing Ringgit is headed for the support at 3.0681, where the risk of a rebound would increase. Sing Ringgit has bounced off this support last week, and I suspect that this week could be the start of a rebound. Another reason why I think Sing Ringgit may be due for a rebound is that the downside has diverged from the lower Bollinger. If this rebound materializes, then I expect a correction to 3.1305 or even 3.1560 in the coming weeks. I cautioned on the 7th of February that Platinum may be forming a head and shoulders top if price action were to develop in some ways. This has happened, and downside is now preferred because price action is trading below the Ichimoku cloud. As noted previously, closing below 1891.87 will complete this bearish pattern. The textbook target is pretty low at 903.25. Moving on to some of the names and FX crosses that I have deemed to be successful calls. That means more than 70% of their textbook targets have been reached, starting off with dollar Sing. On the 28th of February, I highlighted that dollar Sing is forming a symmetrical triangle, and completion will have a move of 169 pips from the point of break. Dollar Sing completed this symmetrical triangle. The textbook target is at 1.2829, which was quickly reached on the 3rd of March. This pattern has been successful, and I will cease coverage on dollar Sing. I began covering Deutsche Bank on the 7th of February and turned technically bearish on it due to the completion of a rising wedge that has a textbook target at 26.16. Deutsche Bank fell to a low of 26.61 this week, reaching 92.9% of its textbook target. I will deem this pattern successful, but maintain coverage on this name to see if the textbook target is fully reached. BNP Paribas completed its rising wedge on the 3rd of March, and the textbook target is at 83.25. It fell to a low of 82.85 on the 6th of March, reaching 82% of its textbook target. Now note that there are gap downs on the 2nd of March and the 3rd of March, so I expect BNP Paribas to feel these gap downs going forward, but the bearish outlook remains valid until this rising wedge is invalidated, which is via an advance above the last high at 97.35. I will maintain coverage on BNP Paribas to see if it reaches its textbook target. I began coverage on Kimberly-Clark on the 7th of February and turned technically bullish on it due to the completion of a falling wedge that has a textbook target at 113.67. Kimberly-Clark reached a high of 111.82 on the 27th of February, which is around 83% of its textbook target. It has since fallen to slightly below the point of breakout. And note that price action bounced off the Ichimoku cloud support. I will view this decline to be the correction phase of its falling wedge and expect bullish resumption phase to soon begin. I will maintain coverage on Kimberly-Clark to see if it reaches its textbook target. Moving on to names that I will no longer be covering going forward, I will cease coverage on dollar yen. Price action rebounded and held above the Ichimoku cloud, therefore further upside should be expected. I suspect that this could risk invalidating the rising wedge. Now I have already updated on the 2nd of February that dollar yen over here reached 93.6% of its rising wedge textbook target at 151.72, so I consider this pattern to be successful and will cease coverage on dollar yen going forward. I will cease coverage on euro sterling. This has been an unsuccessful call. I identified euro sterling as forming a head and shoulders top. This bearish pattern was eventually completed over here, but then euro sterling rallied and invalidated this bearish pattern on the 17th of February. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.